Very good morning, friends and traders. I am Nalini Swami, welcoming to my channel Smart Index Edge. I am happy to announce that I have published an indicator widest bar in tight range. That is the indicator which identifies the widest bar and it labels it out. That is the importance of the indicator. It is a complete guide to identifying explosive breakout setups before they happen. You might have noticed many times the aftermarket trending up or trending down, they fall into a tight range. You will not be knowing whether this range will, if it is a downtrend, if it falls on the tight range, you will not be knowing whether this tight range will be having follow through trend follow. That means if it is in a downtrend, tight range followed by again downfall, or downtrend followed by tight range reversals. Whether it is uptrend or the downtrend, it is a confusion. So this widest bar in tight range indicator identifies the highest volume of widest bar and plots, identifies that and plots, and you can see the signal label on that bar. That is the beauty of this indicator, so that you can quickly identify everything, what is happening in the market. So here in this example, I've taken Nifty 50 15 minutes chart. Actually, the market gap down on Thursday, and then it was the bar started coming down. Market fallen into a tight range. You can see over here this tight range after 10 a.m. it continued up to 11:45. 11:45 it was in a tight range. We didn't know whether the market will continue down or continue up. See, the many traders, after seeing this in this phase, they will start selling again, pressing the button again. But for everything there is a hack. And also my indicator, Nalini Precision Engine and Nalini EMA indicator tells that no, you are not going to sell that. Apart from that, it identifies this wide range in a tight, widest bar in a tight range, identifies this bar, and it is plotting over here. So you should know what is the widest bar in tight range. Widest bar in tight range is very, very helpful. It identifies a single unusually large price bar that appears within a narrow consolidated trading range, signaling the potential start of major directional move. So key components are tight consolidation range, widest bar within that range, volume expansion. There should be volume expansion. It should be accompanied with volume expansion and wide bar, then breakout confirmation takes place. So you can enter into this is the visual pattern, just like a graphical pattern I have here. You can see it is a tight range. It may not be like this. Different presentation will be there, and you are seeing a widest bar over here. Widest bar signifying something is cooking over there, because here the psychology behind widest bar in a trading range phase is market participants reach equilibrium. After some time, you might have seen after a downfall or after an uptrend, market falls into a trend. That is the energy building area actually. That is very, very important phase. Actually, if you identify that phase, tight range with the widest bar, then it will be a break, explosive breakouts will happen in this. So what happens there? Bulls and bears battle in a narrow range because the big money starts accumulating silently or distributing silently within that phase. The retail traders, both bulls and bears, fight with each other. They cannot do anything. Only big money has to bring in the direction. Energy builds as neither side dominates because the retailers cannot do big widest bar, that is because they don't have that money power. Only smart money, big money can do this. Second, here wide bar appears. A huge candle forms far larger than surrounding bars, breaking the equilibrium decisively. Then elevated volume validates the move. See, volume has to validate. There may be a fake bars also. Widest range bars to trap the, there are some situations. That time also you need to see and you have to confirm with volume. The smart money is repositioning. This is not noise. It is institutional intent. Breakout follows. Price exits the range with force. Trap traders add fuel. The traders will be trapped because their stop losses get hunted and they get add fuel. The short covering happens. The wide bar becomes the launch pad for the next major trend. And it is also very useful in identifying the launch pad also. The wide bar represents transfer of power, see over here, from indecision to conviction. That's why this indicator, this widest bar in a tight range indicator is a very, very powerful indicator for all of you. You please utilize this indicator. It is free. You can apply on your chart and make use of it. How to identify the setup? You should have 5 rules for that. No, you should not randomly identify the widest bar. So, first thing, define tight range has to be defined. So, look for 5 to 15 bars where price stays within a narrow band, ideally less than 180 ATR. No sharp spikes, no breakouts. That is the tight range. Then, second step is find the widest bar within the range, locate the single bar with largest spread, that is high-low. If you use the high-low candle, it becomes very easy to identify the largest bar. I have made all those videos, the hacks for the using the high-low candle. It must be significantly bigger than its neighbors. And third step is check the relative size when compared to the others. It should be at least 1.5 to 2x average range of surrounding bars. The bigger, the better. So it should be bigger, the better. My indicator automatically identifies the bar. You need not struggle because when you are using normal candles, it becomes very difficult because each candle will represent in a different wicks will be there and body will be narrow. Within the wick, big wicks and all, it is difficult to visually to identify the widest bars. So fourth step is confirm with volume. Volume has to be confirmed on the white bar, should be above average, ideally above the 20 period volume moving average, or you can utilize my Nalini precision engine. Nalini precision engine, there that bar will close above the pivot, rolling pivot, and the rolling pivot automatically turns if it is below the average. It may become neutral and then it may become green. So, Nalini precision engine assists you to identify this widest bar with conviction. Direction of the bar. A bullish green white bar favors a long setup. A bearish red white bar signals a potential short. Close near the extreme is stronger. The close is also near the extreme, either to the low or either to the high. Now, what bullish versus bearish white bar right range setups. Bullish setup, what happens in the bullish setup? Wide green bar closes near its high. Whereas in the bearish setup, wide red bar closes near its low. Appears after tight consolidation. Even here also appears after tight consolidation. Volume spikes above 20 period moving average. Volume spikes below 20 period moving average. Enter on next bar's breakout above wide bar high. Only you should enter on next bar's breakout. That is, follow through candle should be there. Actually, here also the same thing. You should not hurry yourself after seeing the white bar. What happens after the presentation of the white bar? Actually, sometimes the price comes to the 50 percentage of the white bar. 50 percentage of the white bar acts like a magnet and whether it is a big green bar, it retraces back to 50 percentage, or a bearish setup, it pulls back to the 50 percentage. Stop loss below wide bar low. Here you have to keep stop loss above wide bar high. Target is 2 to 3x of the wide bar range. You can measure the wide bar range 2 times measured move, or 3 times you can anticipate in this. So here the condition here is both setups require the tight range and the wide bar, neither alone is sufficient. If you see the wide bar in trending market, see, this is the condition for the explosive breakout. You need this condition, then only it will be very explosive. This condition you need to see and you need to ascertain. See here, I have taken the 5-minute chart of Nifty on 30th, same thing. After the downtrend, you can see the market. Here wide red color bearish bar has been presented. And intentionally, I included Nalini EMA indicator, where Nalini EMA indicator plots the weekly low. This magenta colored dots is plotting the weekly low, where it is consolidating. Location is also important. Actually, for a fraction here, it threatened to break the weekly low, and many traders, they will look for this data also. Some traders hurry themselves by seeing this data and wide range bar here, they enter into the trade. See, notice here, there is not much big volume and you have to confirm. You have to go apply the volume and check. Before pressing anything, pressing the button, you have to check it. There no follow through bar. It should have followed through like that. And it didn't go down. And again, this Nalini EMA indicator weekly low, it has been color coded. See, when it breaks, it becomes yellow. Again, it became normal to the original color, that is magenta over here. That is another beauty of this Nalini EMA indicator. I've color coded everything. Even Nalini precision engine rolling pivots are color coded. Here you can see it is a tight range of, and a wide bar is forming. This is the entry. You can see the wide bar forming over here, breakout over here. So entry, stop loss and targets. What should be entry? What should you confirm? What is the stop loss? What are the targets? Wait for confirmation. That's what I showed you on the previous slide, that the big red bar did not confirm its follow through fall. So you need to wait for the confirmation. Don't enter on the wide bar itself. That is a must, actually. You need to get a confirmation. Long buy when prices closes above the wide bars high. Short sell when prices close below the wide bars low. Optional enter on pullback to wide bar midpoint. That's what I told you. The price 50% of the wide bar acts as a magnet for the price. So wait for that. Do not enter aggressively. You can enter, but it's a higher risk. So stop loss, what you need to keep the stop loss? For a long trade, stop below the entire tight range low. For a short trade, stop above the entire tight range high. Never place stop inside the wide bar. Never place stop inside the wide bar. That is a must. Do not do that mistake. Add 1 to ticks, 2 ticks buffer beyond the extreme. Wider stop is equal to smaller position size accordingly. If there is a wider stop, then you need not enter into a some people, what they do is immediately they press 10 lots. If they are trading in the options, 10 lots, everything, and 20 lots. No. You have to put a very, very smaller position you have to take. Those are the must for this. So remember all this, take the screenshot. Take the screenshot. These are the rules for that. Targets. What do you expect targets? Target is 1 into the widest bar range, that is the partial close, twice, 3 times. Twice measured move of the twice, and sometimes you will get the 3 times. Trail stop to break even after target 1 is hit. Till that, do not trade your stop loss. Wait till the target. Use ATR-based targets on volatile assets, because options are very, very volatile assets. You have to, and also time decaying factors, you have to use ATR-based targets. Best time frames in the markets. See, it is recommended time frames are daily, most reliable, institutional participation, 4-hour, strong signals, good for swing trades, 1 hour works well, more signals, slightly noisy. On 1 hour, you may get more signals. It may be 15 minutes active day trading requires query. During that, for that, everything, my Nalini precision engine and Nalini EMA indicator takes care of it. Actually, many traders have bought my indicator. They are paid indicators, Nalini EMA, as well as Nalini precision indicators. They will assist you in everything. Weekly time frame is for position trading, high probability setups. If you are a swing trader or a positional trader for 1 month, or sometimes positional for many months, then weekly time frame wide bars will work very well. It works across markets, stocks, ETFs, crypto, forex, futures, and options. So you can utilize across all the assets. That is the beauty. So this indicator is useful for you. Make use of it, and it will solve so much of problems of the tight range. Here, I've explained, taken an example of persistent system. On March, it started after the downfall, it started falling into a range. This is a wide tight range, right? You can see the market was consolidating till from March 1st to, you can see 23rd March, 20th, the entire month it consolidated. After that, in between, you are seeing the widest range bars, and my Nalini precision gave engine here in this accumulation phase. The Nalini precision engine gave confirmation only after 23rd to 24th of March, because its price stayed above the closed above the 4,927, closed above the pivot, and trend flipped, Gann Hilo trend flipped. That is the confirmation. And all the R1, R2, pivot, S1, S2, notice that they have turned green. They have given green signal. So you are entering into a positional trade. This stock rallied up to 5,500. Almost 5,400 or something rallied. From 4, you are getting a buy signal over here, and you notice widest range bars forming over in a tight range. It was not a very tight range. Actually, it is a wide tight range. So then you need to wait. There will be traps will be there in a widest tight range. Okay. Next, in the next example, Tata Power Company. I am on the monthly chart. This stock consolidated after the run-up, consolidated in a lower range for nearly 1 year. Nearly 1 year, it has consolidated above the Gann Hilo. Trend was intact, but there was no price expansion. The price was rallying between 326 to 402. That is not a small price movement, but even then, here you can see clear breakout, widest range bar on a monthly. It has with the volume. You can see the green. You can see follow through. You can consider track this stock for your investment purpose or a swing trade. You can track this. Tata Power, you can track this. 494. It is now, it was a 494. It has closed around 444. You can track this stock. Okay. Like that, you can track. This one is the Ramakrishna Forgings. It was continuously falling since 2023, it was in a continuous downtrend, very good stock, forging stock. But now you can see this stock is showing a reversal signal, widest bar, consecutive widest bar, still trend has not flipped, and even the on the monthly the pivot price has not climbed, but you can consider in if I go to the daily time frame or anything, you can consider this, and widest range bar on a monthly it has formed, just mark the high and low of the candle, and the high was 617, now it has closed around 598. Wait for a proper signal and you can consider for swing trade or positional trade in this stock. Like this, identification of the stocks becomes easy with my Nalini precision engine, 6-hour buy and everything, it will be plotted, and also with the Nalini EMA indicator for location. So common mistakes, what you need to avoid. That is very, very important. You should not do these mistakes. You should know when to do, when not to do. Entering on the wide bar itself. No. Because it is a wide range bar. Where will you keep? Your stop loss will be very wide. For your risk to reward becomes very high. Risk becomes very high. So wait for confirmation of the next bar. Wait for it. Sometimes it may be a fake bar. Sometimes smart money tends to trap the retailers by presenting this type of wide range bars. So you wait for the confirmation on the next bar. Do not enter on the wide bar itself. If the range is too wide to be tight. Tight range bars clustered closely, don't force the pattern. Range is too wide. That's what happened in persistent systems. The range was very wide. It is not too tight. Only after 1 month of consolidation, it gave buy signal. So for that, my Nalini precision engine helped the people to enter properly, identify properly into the trade. Placing stop inside the pattern. You should never place a stop inside the pattern. Suppose if you are an positional trader, you are buying an asset, then do not place a stop loss inside the pattern. And you should not ignore the volume. Volume has to be confirmed. This widest range bar should be accompanied with volume. So enable volume on volume indicator on the chart. It is available free, and big volume also, if it is accompanying, that is confirmation. Always check if volume confirms. Taking every wide bar you see. You should avoid taking every. The range must precede the wide bar. That is a must. There should be a consolidation range when you see the widest bar. That is the must. Context is everything. Remember that. Context is everything. Without any context, do not enter into the wide bar. Not adjusting for trending markets. If there are trending markets, you will see consecutive wide range bars. If the market is trending, you will be seeing follow through widest range bars. Ranging markets for wide range bar trading setup is very, very important. So this indicator, widest bar range in a tight range indicators, makes very simple to identify all these things. Don't do this. These are the things you should. So for a quick reference, this is the thing. You can take a screenshot, keep it on your desktop. Price, these are the first checklist. Price has been a tight range for 5 to 15 bars. That is first checklist. You have to write down and you have to put a checklist. Wide bar appears significantly larger than surrounding bars. Wide bar range is at least 1 to 5. These are all the things. I'm not going to tell again and again. You just take the screenshot before entering into anything. You put a checklist for everything. This is a quick reference table you can utilize, and you can take the screenshot and you can write down and you can put a checklist for that. Okay, friends, this is all about the widest range tight bar, which helps you in your trade. And I hope I thank you all for supporting me in buying my Nalini Precision Engine and Nalini EMA indicator. As a gift, I have given it to the community to utilize this widest range bar indicator. Thank you very much. Nalini Swami signing off.